Welcome back to the market matrix, and right now let's get into the broadening bottom. We already spoke about the broadening top, but let's go over it really quick just to get a quick recap and cover up a couple things. So if you remember the broadening top, we had a stock that moved up and then it sort of formed this weird formation where it looked like an alligator's mouth, it looked like a megaphone, whatever you want to call it, as long as you know that it came from an up move, went like this, it went like this, sort of having this top that kept getting wider. And what we noticed was that it was forming higher highs and at the same time forming higher lows, sort of moving up but getting wider as it was happening. Now this one, most of the patterns we already spoke about, like the double top, double bottom, triple top, triple bottom, head and shoulders, inverse head and shoulders, all of the patterns we spoke about, they were very easy to find their inverse. So the double bottom, for example, you just flip it upside down and it's a double top. The head and shoulders, we sort of just see it the other way and we see that it's an inverse head and shoulders. Now, with this broadening top, broadening bottom, there's going to be something that's slightly different. There's going to be something that they don't share. And this is the fact that the broadening top had higher highs and higher lows. This broadening bottom is not going to have that, and we'll see that right now as we go. So, stock runs down and starts bouncing up, bouncing down, forming this weird formation where it just doesn't know where it wants to go. It's a fight. It wants to run up, but it wants to run down. The buyers are trying to push it higher. The sellers are trying to push it lower. What's going on? Nobody knows. Let's see what's going on. So if we slap a trend line over here, we see that it's forming higher highs. There's a high right there. There's a higher high. There's a higher high. There's a higher high. It's forming higher highs. And at the same time, what's going on down here? There's a low. There's a lower low. There's a lower low. There's a lower low. So it's forming higher highs and higher lows. So it also sort of has that megaphone type of look, except it's upside down. Remember, broadening top, higher highs, and higher lows. This one over here, lower lows, higher highs. So it's sort of like a pennant, except the opposite. This part is sort of the opposite, just flipped in the mirror, imagine. And it's sort of like a broadening top, except the opposite, except imagine mirror is this way, and it's flipped like this. So it's a little weird, it can get a little tricky. But just know that this is a reversal pattern. Broadening bottom, broadening top. There are two reversal patterns. The pennants we had, the bullish pennant and bearish pennant, those were continuation patterns. If you remember, we had this, and continued to the upside, the bullish pennant. The bearish pennant, we had this, continued to the downside. Now this is not the same as the pennant. If this was a pennant, it would look like this, and it would continue to the downside. This one is sort of the opposite. You see, instead of the pennant going like this, it's sort of the opposite. It's going like this. If you could see that, you could see the triangle is sort of like this. So this is a continuation pattern. Not a continuation pattern. This is a reversal pattern. The broadening bottom is a reversal pattern. Same as the broadening top. It is a reversal pattern. This one is bullish. The broadening top is bearish. It can get a little confusing because you hear top bearish, bottom bullish. But if you have the proper psychology tweak, then that is the mindset you should have. Top bearish, bottom bullish. Because at support, you technically want to be bullish. And at resistance, you typically want to be bearish. We'll get more into that and why later on. Because when I was first starting, I would think, oh my God, it's going up. Why would I want to get out when it's going up over here? Oh my God, it's coming down. Why would I want to get in when it's coming down? But it only makes sense if you want to have good prices when you get in and you want to get out at good prices. Why would you want to buy over here, up here, and sell down here? But that's for a whole nother day, a whole nother topic, even more than one topic we'll get into just based off of that. So right now, let's stick to the broadening bottom. Again, stock comes down, forms higher highs, lower lows, sort of has this megaphone look. And what's going on over here? The bulls are fighting. The bears are fighting. They're trying to send it lower. They're trying to send it higher. They're trying to send it even lower. They're trying to send it even more higher. But what's going on is up until it reaches a point where it breaks somewhere, nothing is happening basically. It's just getting wider and wider and wider. So over here, nobody was as aggressive as they are over here. Over here, okay, after this down move, maybe they were waiting. They're like, okay, let's see what happens. And then the buyers stepped in a little bit. And then the sellers decided to step in a little bit. And then they were saying, oh, wait, there's more buyers stepping in. Wait, there's more sellers stepping in. So remember, the pennant we had less and less activity going on. It started off a lot, until nobody did anything, until somebody finally did anything. In this case, it has a big move, and then nobody's doing anything until the buyers are doing a lot and the sellers are doing more, and then the buyers are doing more and sellers are doing more, until one side does even more to send it higher or sends it lower. So let's see how this plays out. Remember, higher highs, lower lows. There's the broadening bottom. The measured move we're going to have, this shares the same measured move as the broadening top does. You're going to find the lowest point of trend support, which is down over here, and the highest point of trend resistance, which we have over here. We're going to measure the move between those two. Remember, we're not going to measure like this, make it all sideways. We're going to make it straight. Straight up from the bottom trend support up to the top trend resistance. That is the move we should expect. Where should we expect that move? If you remember from the broadening top video, it's going to be very similar. We are going to expect that move once it breaks and closes above the trend resistance. That's where we should start this move. So this move over here, we should put it right over here, the candle that broke it. Now the entry is going to be once we get a candle to break and close. We want to break and close above this trend resistance over here. The reason why we want a candle to break and close above here is because let's say this candle broke like this and it stayed up there for a couple minutes and then it closed like this. In this case, you never got a candle that closed above it. You never got confirmation really. All you got was a candle that broke out over here and came back down. Maybe this was a fake out. Maybe this was big money just trying to get some retail money in just so they could get out. We don't know exactly, but all we know, we want a candle to break and close above here for our entry. So once we see that, we want to enter over here. And we already know the measured move. So what we're going to do with that measured move, as we spoke about before, we're going to take it from down here to here, put it right above here where it breaks, measure it right there. And then you just ride the wave. And as usual, at that point, like we constantly speak about, at that point, we know the measured move. We know the pattern. It's not like we're looking at this as if it's a cup and handle and we should expect to move all the way up here. No, we know the measured move is going to be this. So once we see this, what's the point of staying in the trade unless you see a continuation, unless you have more knowledge than just the pattern? Because a lot of times, again, you're going to probably stay in these trades longer once you learn more and once you move on. But at first, you would probably want to get out once you see this measured move. Because let's say you stay in the trade much longer and it keeps going in your favor. And what's going to happen in your mind maybe is next time you see this pattern, you're going to get in, you're going to measure the move. Cool, it has its measured move. And then you're going to think in your head maybe, oh, I remember last time it had its measured move. And then it moved again the same amount. So what am I going to do up here? Let me buy more. Let me buy twice the amount I already have. And what you might do in that case is you might set yourself at risk for this thing to go against you. Last time maybe there was enough buying volume. Maybe there was a catalyst. Maybe there was news. Maybe there was something that kept pushing it higher. We don't know what it. Maybe the overall market turned around. We don't know exactly what it is. I'm just using examples. But at first, what you should do if you're just learning these patterns, the candlesticks, the formations, is if you know the measured move, take the measured move and go. And then you take another piece. You know what volume is. You start adding that into it to see if the buyers are still strong. Then maybe you could stay in the trade a little longer. Maybe you could adjust it. Maybe you could sell some. Maybe you could add some. But at first, simplified, you know where the entry is. You know where the exit is. You know how much the measured move is. So take those and use those to your benefit.